to this week's edition of Sonoma Brain Trust. With me this week, we've got Chelsie Runnings, myself, Daren Blonski. Chelsie Runnings is a local real estate agent with Better Homes and Garden. I'm Daren Blonski with Sonoma Wealth Advisors. Mary Piasta, our other partner, she is out this week on vacation with her family, enjoying the Midwest. Hope she's having a great time. Today, we're going to dive into a couple things. One of the big pieces that's really important to talk about today is the real estate trends in the Valley. So, Chelsie, you and I were talking prior to this, and sounds like we had a pretty big month in real estate in the Valley.
We had a massive month in the Valley, and I think it's so interesting because I keep hearing people say they're just waiting for the market to crash to buy real estate, and I really don't see that happening. Before I jump into these massive numbers for the Valley, I just wanted to tell you guys a couple things. The National Association of Realtors, they always do reporting nationally on real estate trends, and I thought it was really interesting that they reported through the month of May that pending home sales surged 44% throughout the month from April. And that's actually the biggest month-to-month increase since the National Association of Realtors started doing this kind of reporting in January of 2001. So that's huge, right? Like the biggest increase in pending sales happened during our pandemic, like March, April, May, third month, second month. And then also in June, our showing activity went up 56% compared to where we were last year. So that's huge, right?
Totally. It's funny because I was talking to a buddy of mine who just sold his house in the Valley, and he was talking to his neighbor about it. And the neighbor said, like 60 people came and looked at the house, and he said at least 2/3 of the people coming to buy the house were driving a Tesla.
Yeah, I think it plays into that urban flight syndrome, right? Everyone leaving the cities. But also I think, like you keep saying, people are sick of being locked up, pent up, like stuck at home. So now I think more people are actually getting out and looking at these properties now that I think the coronavirus scare maybe went down a little bit, even though we're back up into massive numbers again, but people are out there looking at homes. So in the Valley, what we saw was we have currently 135 houses for sale in Sonoma Valley. That's Kenwood, Glen Ellen, Sonoma. 53 sold in June at an average price of $1.5 million. And then I want to show you guys the total sales volume for June because it's just wild to me. Okay. Can you see my screen okay?
Yeah, so 53 homes sold. But
yeah.
Now I can't see it. We could see it, but now we can't.
No. Hold on. You see it now?
Yeah.
Okay. So 53 homes sold in Sonoma Valley for the month of June. So you can see June 1st through June 30th. Look at this number over here on the right side. $81,437,000 worth of real estate was sold in June alone.
We can't see that. Can you move your screen scroll or something?
Can you see it?
There we go. Now we can see it. Wow, look at that. 81 million.
That's just in June, just June alone. That's not the whole year. That's just June.
Yeah.
And that's crazy, right? And then you can also see that the average selling price was $1,536,000. So I want to show you guys what we saw in June.
Square footage is interesting too. 693 is the average price per square foot.
Yeah. I mean, I heard something like 2 weeks ago that I thought definitely, for me, it resonated. It was within chaos lies opportunity. And I think people are definitely jumping on these really low interest rates right now and trying to take advantage of extra space that they can get in Sonoma Valley compared to San Francisco. But look at that number, 81 million. And then look at what we saw in June 2019. 47 houses sold. And there was only 52 million sold. $52 million. Almost 53 million.
Huh. So big jump, and it reminds me of this thing we always talk about in investing, Chelsie, and we call it recency bias, right? So as humans, we have this inclination to think that what we're going to go through is what we just went through, right? So like Pavlov's dogs, when in our mind recession goes off, we're like, oh, real estate property prices must be going down. And certainly these facts don't support that.
Definitely not. And so June, you know, we had the 53. We currently have 70 houses under contract in Sonoma Valley right now. So it's going to be really interesting to see what July has for us. And I think I mentioned a couple weeks ago to expect that the summer months, we're going to see a massive boom in real estate transactions happening. And I think that we're like right on the money with that. I think July, August, September, we're going to just see huge increases in transactions happening.
Yeah, interesting too, because historically in the Valley, correct me if I'm wrong, but real estate kind of slows down over the summer. It doesn't seem like that's the case.
Yeah, usually when school kind of gets let out and people are on vacation taking the kids away, usually you do see a decline in the transactions in the real estate world. But I mean, you're not really traveling right now, so what else do you have to do besides?
Yeah, it's kind of, there's kind of like this change that just pushed into everybody, right? So hey, if we're gonna sell, let's sell now. Hey, if we're gonna move, let's move now.
It's not funny, but it's crazy to see, you know, so many businesses are kind of shutting down and things are stalling and people are having trouble making ends meet. But at the same time, there's massive amounts of numbers happening out there in the real estate world. I don't know if you're seeing the same thing in the financial world, but in the real estate world, we're moving.
Well, yeah, I mean, you certainly in the financial world, you're certainly seeing markets that continue to move forward and do well, even amidst, you know, the economic news. And a lot of that is coming from the tech sectors, right? So probably a lot of these people who are buying the houses largely are coming from the tech sector. If you look at the S&P 500, which those who have watched this show in the past know that I watch this guy with a hawk eye, and pretty much from 6 a.m. to 1 o'clock every day, I'm on the computer watching this thing and looking at the market symmetry. And there's kind of two ways, you know, you look at the market, right? You look at the fundamental data and you look at the technical data. And my belief is that, you know, fundamental data doesn't necessarily lead you into the correct path because it can often be wrong. Whereas technical data, I mean, it is the market is what's happening. So you want to look at the technical data and say, okay, based upon this data, now let's go look at the fundamental data and help us understand what's going on. For example, last Friday was a great example because, or last Thursday, excuse me, the market closed down going into July 4th holiday and we had a pretty sharp sell-off. Well, if you were looking at the fundamental data, you would have said, well, why did this sell off? It makes no sense. Well, this makes sense from a technical perspective just because people were letting positions going into the weekend because there's, you know, when you go into a long 3-day weekend with a lot of COVID news coming out, it's a pretty risky to hold your position long, as we say, or to keep your stock. So a lot of the traders exit on long weekends like that. And lo and behold, Monday came around the corner and we gapped up. So you can see that closing price on the SPY of 312.19. Well, we gapped up and opened up at 315.92. So for those who did hold on over the weekend, they made a nice little chunk of change. Really interesting, though, if you step back and you look at really what's been going on since last Monday, we've basically had, you know, all up since last Monday, and just yesterday and today we had a gap up in the morning, but we've been flat. What's tending to happen is a lot of the gains, if you notice, are coming from overnight markets, right? You get these gap ups that happen, and you can see that market closes here but then opens up, closes here but then opens up, closes low but then opens up, and then travels sideways during the day. But one of the interesting chart formation patterns you're seeing is this is what we call a bear flag. So when you see a movement up and then a sideways channeling like this, that's what we call a bear flag. The alternative, if you see it move down, or both, that's a bull flag, excuse me. This is a bear flag. You see this channeling sideways and then a breakdown further. And then you can see the symmetry here, the pattern of the markets. There's your bull flag, move up, channel sideways, move up. That's how the market tends to move up. And over the last 5 days, we've been consistently doing that. So are we coming to an end here? Is this going to be another top, and are we going to head back down south? Well, certainly the data, I mean, is from COVID is pretty challenging right now. What's the positive though is the Fed and the stimulus potentially coming from a fiscal and monetary standpoint, right? So don't fight the Fed, the old adage in investing. But the fundamentals, I mean, they're okay, but they certainly aren't wonderful. We'll see, because we're starting to enter earnings seasons. When earnings seasons comes in, we start to really see with these companies reporting what the damage really was in the second quarter of the year. So I like to look at mobility trends with Apple is one way, just to get the make sure that you can see the screen here. There you go. There's mobility trends. So if you figure all these people queuing the system to say, hey, I'm traveling, you can really see how much that's happening. And you can see we're well above baseline with the silver in the US. So that's good. Whereas when we shut everything down back in March, things looked pretty dire. And this is a good way just to say, okay, well, yeah, granted there's COVID out there, but is it really impacting how much people are traveling around and doing things? And it's interesting. You can see the baseline here. We've now dropped below baseline here in California. Put in Texas, for example, where they've had a lot of cases, especially in the Houston area. And you can see same thing, they're dropped below baseline. So areas that are hard hit by the COVID, they're tending to see that. The other real-time indicator I like to look at, just because, it's funny, last night I turned on the news, and man, every time I turn on the news, I just feel worse, right? So I just stop watching that stuff, because it's like, it just pumps all the garbage at you. And so I like to look at these two kind of indicators to tell me where things are. And then I'll do a quick headline scan, but more or less, I mean, the stuff coming off Fox and CNN, MSNBC, NBC, ABC, all those, it's just toxic. And but I do want to see how often people are searching Google for COVID symptoms. See, it makes sense, right? If you've felt like, Chelsie, you were getting sick, you would be like, well, then I need to look up and if this symptom is really COVID. So people are queuing the system, and interesting, you can see they're queuing it more than they were in March right now.
Right. I mean, we've had summertime though, so I'm not surprised that people are checking it out more now that everyone's kind of getting together and hanging out in groups of people, and our numbers keep spiking. Are you surprised?
I'm not. Yeah, I mean, you had the riots that happened. There's no way that didn't contribute to some spreading. I don't care what. I mean, you get all this media pumping at you, and it's like, well, did the riots spread it, or is it the get-togethers on July 4th or Memorial Day? I mean, the bottom line is this is a pathogen that we know transitions between people if they interact with each other.
Right.
So if you interact with each other in a closer environment where you're sharing the air, guess what? You're going to get it if it's around. And that's just the nature of it. So I don't think we need to overthink it or over politicize it. It is what it is, And I think all of us have transitioned to a place where we're going to measure the risk of expanding our social circle. I don't know. How about you, Chelsie? Do you guys find that you're less engaged with a lot of people? I know you.
The first few months, like March, April, and May, I was definitely kind of solo at my house, not really leaving the house. I've expanded my socialization to include my family. So I'm hanging out with my brothers a lot more. Perhaps not maybe the best thing, because they spend a lot more time with their friends and out and about, but I limit my exposure to everyone else pretty much for the most part, but I have been seeing my family more frequently, having family barbecues together. So none of us are sick. I don't know if any of us are asymptomatic, but none of us have been sick. Nobody around us has complained of being sick or having symptoms. So I don't know. I took a very serious stance on it March, April, and May. But I mean, I got lonely. I missed my family, man. My brothers are 21 and 26, and they're fun to hang out with. And I want to hang out with them. It's summertime. This is when we do all of our stuff. And I don't know, maybe irresponsible on my part, but I don't know.
Well, I think you're expressing what everybody's wrestling with, right? It's like humans are fundamentally social. And if we're not engaged with other people, it gets lonely and dreary and awful. And hey, don't get me wrong, I love being on Zoom and YouTube and stuff, but come on, like at some point, like it's too much, and you need that socialization. So I think people are just going to take that measured risk. I don't think we're going to get, really control what I've suspected for a long time. I call it the slow burn with COVID. There's just going to be, it's going to pop up in different places unless it just gets overwhelming. And that's really what's going on with the market. The market, I think, sees that. It's just, with stimulus, both monetary and fiscal, this is going to continue to pace forward unless it just gets overwhelming. I will note that this was our high from June 8th. And you can see that high right there where we just kind of shot up and spiked it. And then we dropped back down once. And we haven't been able to recapture that high from June 8th. It's less likely we capture that. Certainly in the July, August months, the markets tend to quiet down. It's going to take some push to get above there. Although if volume is low, the market floats higher, it goes sideways. So we'll see over the next few weeks, but it's been a good week in the market. The other thing I posted this on my YouTube channel, and every time we get near this 300 mark, it's just kind of interesting to watch. The Fed comes out with some announcement. Like they did this on the 15th right here. And they came out and they said, oh, we're going to buy individual corporate bonds. So they're going to basically pick the winner and losers of the corporate America. And then last week, Monday, they came out and said, oh, here's who we purchased, right? So they keep, anytime the market looks like it's going to fall apart, they come out and they basically say, hey, we have a bazooka. And then anytime it falls apart again, like, let us just remind you we have a bazooka. And that seems to be what's happening in the market. And I think we'll continue to see it. So let's leave it there. I don't have anything else for this week. Chelsie, do you?
I have nothing else for this week. I just think stay healthy. My little cousin, I do want to say, my little cousin's 10 and 12. My 10-year-old broke his elbow and both his wrists in May riding his bike. And a week later, his older brother wanted to buy a skateboard, and his mom was like, nope, we're not doing that. Your little brother just broke 3 bones. We're not doing that. And he looked her in the face and he said, Mom, I cannot live my life in fear. And I just thought, for like a 12-year-old, that was so, I don't know. It was just very shocking to hear a 12-year-old say that, but I kind of feel like that's where we're at right now with everybody else. They just can't live their lives in fear. And I think we're seeing that in the real estate world and perhaps in the financial world.
I think people are just ready to move on, and we're going to take risks that's measured. And I think certainly those with compromised immune systems and at risk. What's interesting is our generation, Chelsie. I mean, I guess I'm slightly one generation above you, or halfway to it. I don't know. But the number of cases within the 29 to 40-year-olds is spiking considerably. And Newsom came out yesterday. A lot of people love him. A lot of people hate him. Said, our generation in particular is really taking a lot more risk than the other generations. And I think the message was loud and clear to those in the 60 and older age, but our generation just threw caution to the wind over the past few months. And that's really coming out in the numbers now. And we're really seeing that.
Yeah. It's going to be interesting to see how the rest of the summer and the rest of the year plays out in those numbers.
For sure. Well, we appreciate each of you for taking the time to watch Sonoma Brain Trust. We try to bring you guys relevant, important, factual-based content each week. As we continue to navigate and sort through this, please feel free to subscribe. Feel free to comment below. We'd love to hear from you. We'd love to hear from anyone who'd be interested in coming on and talking with us in the community. And we look forward to seeing you next week. And don't forget to like us and subscribe. Take care.
Thanks, guys.